Well, hello, good afternoon. And as we're taking the seat, we are here for a very exciting session, Banking Beyond Border. It's the end of the global banking or paradigm shift. And as we know, the three distinguished speakers, two are from bank and one used to be working in a bank who promised to tell us something that banks won't say. And we'll start with the question of our theme. Is that a paradigm shift, or is that end of global banking? How do you see that evolving last decade? Maybe start with the bank first. Brad.
Okay, well, I'm going to be a contrarian and I'm going to dive off at a tangent right from the bat then, because I don't really conform to any of the conventional wisdoms that there's necessarily a universal trend of global banking either being in retreat or being in expansion. My view is that well, firstly, for any individual firm that's perhaps sending those signals, that's always a factor of each bank's strategy, its own particular competencies, its own what particular transfer pricing models it takes, etc. There's a range of factors that drive that for any firm. But I take the view that banking is at its best and we're at our best when we're solving real economic problems, meeting real economic needs. And so I probably look at it more from a perspective of what are the big global megatrends, if I put my futurist hat on, what are the big global megatrends that are going to influence how we step forward and play our role in the economy? I think there's probably four big megatrends, and I won't monopolise all the time to laboriously go through all of them, but if I respect the global and cross-border nature of the topic, I think the one that really stands out there is what does the future of geopolitical tensions and some of the trade fragmentations look like? And I think a lot of the stability that the world has enjoyed and the trade patterns and the efficiencies that have been generated over the last few decades are looming under threat, not only from where we look at in conflicts and sanctions, but what's the future security and efficiency in shipping lines that we depend on as part of trade? What are the intellectual property rules around data transfers across borders? And I think these stand to really significantly shift trade patterns and therefore a lot of the international activity that banks do in support of our customers working across borders. And I think we may well face into challenges around, if we need to look at rapidly standing up industries or capabilities within our economies that we don't currently have because of some of those supply chains being severed, we're going to need not only technological capability to help solve the problem. Big believer in what Ravi Menon spoke about this morning, about tech being a core part of the solution to those problems. We're going to need the skills in those new industries that we're standing up, and we're also going to need capital. And so banks will play, I think, a crucial role in helping to enable those adaptations and transitions. And our small business customers will indeed, I'm sure, face some cash flow shocks and need cash flow support through some of those transitions and those geopolitical shocks as they occur. So I probably look, if you'll excuse me diving off at a tangent so early in the discussion, I don't see it through a prism necessarily of global banking being either the future or the past, but rather, banking being at its best will mean that we will need to adapt with these, I think probably four big megatrends and specifically on cross-border, how does that fit with trade patterns and trade finance?
Thank you. So be adaptive and try to solve real economic problems, and banking will always stay relevant. Well, Simon, WeLab is a disruptor of a bank. It's a virtual bank, and you are in Hong Kong or expanding to Indonesia. How do you see banking evolving, coming from the traditional bank and now in a virtual bank?
I think it's quite interesting. We launched, we've been around for 10 years. We launched the first bank in Hong Kong around 3-4 years ago. We're going to be launching our second bank in Indonesia next Monday. So I think the way we look at it is, one interesting way to look at this is analyze how Citi, what happened to Citi, the retail side, right? They exited in many markets. They talk about it being a capital allocation focus issue. But I think more is about it's a cost issue, how actually global banks can scale in multiple markets at the same time. And I think it's a cost issues. Most of these global banks, when they are in a country, they become a foreign bank, and foreign banks often struggle to compete with local banks. If you look at Southeast Asia, most local banks are actually much bigger than foreign banks. And many of them struggle because they could not open up as many branches, their products are not as competitive. And the way we work with a lot of these banks are we actually offer our technologies to them. So in addition to running the banks ourselves, we actually license some of our technologies and work with international banks. For example, HSBC, we just announced a few months ago that we have a regional contract with HSBC starting from Malaysia, where we will co-develop user experience and technologies together so that they can acquire customers online efficiently in a cost-effective basis. So I think this is more how we think about efficiency can allow these banks to continue to compete on a local level, just like a local player.
So compete and also collaborate with the dinosaurs
Yes.
at the local level. So Anju, what would you comment?
Well, I would say that, in my view, it is the end of global banking as we knew it. Simon and I used to work together at Citibank and also at Standard Chartered, and Citibank exited a lot of markets across many countries for the retail banking business in the last 1 year. And I think it's driven by two main factors. One is that the local banks and regional banks have become bigger and better and stronger, and they can compete better in their domestic markets because they have fewer restrictions than the foreign banks have. And the second factor is that post-global financial crisis, a lot of the banks were encouraged by their local regulators to set up subsidiaries. And when you set up a ring-fenced subsidiary in any country, it has huge implications for the bank in terms of capital and in terms of liquidity. Your capital is locked up. You're no longer really a branch of a global bank, and your liquidity is not as fungible as it used to be, and it creates issues at the holding company level. So I think a combination of these two factors has resulted in what we are seeing today. We are seeing the local and regional players get bigger and stronger, and also the focus, right? You can't really focus on 50 or 60 or 70 countries. You pick a few markets and then you do a really good job there. And then we are now seeing the newer version of those as well, the digital banks, the likes of what Simon has started. So it is the end of global banking as one big global bank that we used to know of many years ago.
And it becomes a more complex picture with much more
Correct.
players.
It becomes very capital inefficient.
Yeah. And I want to slightly switch to a different topic, the opportunities you see, instead of just comparing the big banks or the global banks with the local and regional banks. In general, what opportunities, especially tech opportunities you see, can bring sea change in this region when you talk about inclusive finance, and especially there's still 1.4 adults who remain unbanked in the world? Anyone would pick that? Probably start with Simon, because digital is a part of the solution.
Yeah, I think financial inclusion continues to be a very big topic across the region. We started doing a lot of it in our mainland China business with Postal Savings Bank of China, where they were predominantly serving customers through post offices. Right, we started doing it with them, and from there we expanded our B2B model, where we help a lot of smaller village and city commercial banks to do that. And the second thing that we do, we continue to expand it into Indonesia now, where we work with Astra. Obviously, Indonesia being a very large population, 270 million population, still very largely underbanked and underserved. We find that digital services can help them drastically. Number one is, once again, is an opportunity cost issue, right? You don't need someone to travel to a branch. Number two is you don't need a laptop or computer. Mobile phone is infinitely cheaper. Data connection is cheap. So there's actually a lot of ways to scale that, and a lot of it, what we do now is also how we work with partners in order to scale for the financial inclusion.
One of the key services I see going forward that banks can provide into the economy is digital identity or identity verification services. And I think this is really important for the unbanked in a number of markets. In our market in Australia, we have a substantive Indigenous population who have not been well served by traditional identity requirements. In a lot of cases, people that don't have birth certificates, and it's been difficult for them to get access to other services and ultimately onboarding for employment, for instance. So that's something that we're very committed at NAB that we're wanting to take forward for our population. But I know that in common to that, you may have seen David Hardoon here on this stage a couple of days ago with his work at the Aboites Group. They're on a similar mission for people in the more remote parts of the Philippines. HSBC's done a lot of fantastic work in the UK with the victims of human trafficking and the homeless, and providing where the bank can provide identity verification services that help provide an on-ramp for those people into other areas of economic life. So I think that's a really important piece that we have a responsibility, I think a societal obligation to step forward and play our part in helping the inclusion for those communities. And it does fit, I think, with a broader opportunity for us commercially, in that identity verification services are something that plays off the position of trust that banks inherently have. People trust us with their data, with their personal data, with their identity. And it's a way to help minimise, instead of having to share your passport, share your driver's licence when you're onboarding for a new job or renting an apartment or what, being able to have your bank provide a verification and attestation, I think is a really important piece. So we're really proud with the Connect ID initiative that we've just launched with Australia Payments Plus, and we'll be ramping up and expanding the array of use cases and relying parties where that's valid. And maybe I'll pause there for the moment, Li-Xing, but I'd love to come back and talk about the cross-border opportunities in that space, because I think it's really important that identity works not only within a national system, because these are not closed systems, these are not closed economies, and people have social interactions and trade and migration with people in other markets. So we need that identity verification economic problem to be solved collectively and with interoperability.
Interesting. Anju?
So I used to be in banking. I left banking 7 years ago. I now work with a fintech venture fund. It's a $1 billion fund that invests in fintech companies globally. And 7 years ago when we started investing, there was this phase where the fintech companies were very arrogant, and it was like, we are going to kill the banks. And then came a time where the tables were turned and the banks said, they are no longer relevant, let's ignore them. And then a couple of years ago, things changed completely when big tech companies started getting into financial services. We are now in a period of collaboration between fintechs and banks. And I think that's a huge opportunity, whether you call it banking as a service, or you call it rent a license, or you call it embedded finance. But there are great opportunities for partnership and collaboration between the banks and the non-banking entities, because now they both have this one common enemy who is, who has a huge customer base and who is very well funded and with very deep pockets, and there is a need to innovate and to build a moat to stay in the game and to stay ahead of others, maybe in some ways. So I like this new phase of collaboration between the banks and non-banks. I mean, Simon's company does that in China. You partner with a bank. Standard Chartered made so many announcements this week on their collaborations. DBS does it all the time. So I think there are more and more opportunities in this area.
So whenever we talk about opportunities, the next word coming to follow that is risk. What are the key risks you see either to, we talk about inclusive finance, either to the very people you want to help, or to any systemic risk in terms of the trend we just mentioned? So maybe Steph and Brad.
Well, I think the biggest risk or the biggest threat that we all collectively face at the moment is the pretty rampant fraud and scams agenda. And there's no shortage of activity from bad actors that are seeking to undermine institutions and industry, but also to victimise individuals. So I think how we counter fraud and scams is first and foremost. I feel looking across the things we see in this festival this week, AI is obviously very much first and foremost as the key topic. I feel we're in a little bit of an arms race with AI at the moment, in that there are a lot of great opportunities for us to be using AI to improve our detection and our ability to combat bad actors. But equally, we know that the bad actors are using it themselves as well, in the way that they improve their or increase their impersonation and social engineering capabilities. So I think that's, first and foremost is how we counter that fraud and scams position. And I think the digital identity initiative that I mentioned is a key part for us of how we help to minimise the amount of identity data that ends up getting shared ultimately on the dark web and becoming the seeds of the next round of scams and impersonation. So there's many solutions, many strands we need to be taking forward in that space, but I think that's the big one at the moment.
I would say two big risks. One is, of course, the cybersecurity risk that you alluded to, and that's true for banks, non-banks, everybody, right? Everyone has to be very mindful of those challenges. But in addition to that, specifically related to banking, I think one big burden in the last few years has been financial crime compliance. In terms of number of people, in terms of expense, in terms of resources, I think the banks have probably increased it by a factor of 10 or maybe even 20 to deal with financial crime compliance. But I really feel quite strongly about it that it hasn't solved the problem. It hasn't solved the problem of money laundering, or it hasn't solved the problem of terrorist financing, and all it has done is increase the burden of compliance, because the way it's being approached, it's never going to solve the problem. It's, banks are filing more and more SARS reports. But if you look at those SARS reports in isolation for a bank, or even in isolation within a country and not across countries, it doesn't help in solving the real problem that you need to solve. There was an event recently where Elon Musk made a statement. He said it in the context of artificial intelligence, and he said we should get to a point where we have insights before we get to too much oversight. And when it comes to financial crime compliance, I just feel like all the banks and fintech companies now have too much oversight, and too much. It's become very burdensome, but not enough insights to solve the problem. And honestly, I don't know what the solution is, but it's a huge risk. And the consequence of that is that the banks have become more cautious, right? There have been several instances of accounts of SMEs being closed, or the accounts of fintech companies being closed, or the companies not even being able to open an account with a banking institution. And that's not helping with inclusion. It's just the opposite of that. But I can understand the position that the banks take as well, because of the risks associated with that.
Interesting. And Simon, do you find that overburden, like Anju described, in terms of the cost of a compliance, and whether there is a balance between the insight and the oversight?
I think it's very, very hard to balance that. I think it's extremely hard to balance that. And to what Anju was alluding to, I think the balance is even a bigger challenge for larger banks. Without going to detailed names, I think that the banks have been fined in the past for violating AML, KYC, and hence those larger banks have resolved to even more risk averse in terms of opening up bank accounts. And from there, then in order to continue to survive, a lot of smaller companies, individuals, resolve to using cross-border payment digital wallet, like digital wallets as in not like Web3 digital wallet, as in like literally digital payments wallet to transfer funds internationally. And that actually create a completely different risk and even more difficult for us to monitor what's going on. I think that is actually, we see people moving towards that trend. I mean, I have a friend talking to me saying that they can't open up an account with a certain bank in Hong Kong, and I asked him, so how do you transfer funds? He said, I just use a online stock brokerage account. He said, because online stock brokerage account is easier to open up the account, I put money with them. But then I asked him, so where do that money goes to? He said, it goes to another bank. But I said, do you know that it's actually not under your own name? It's actually under the stockbroker's name. So when the stockbrokers go bust, your money goes away with them. So I think it creates a lot of different complexity revolve around it with that.
Regulation need to play a catch up. Well, Brad, you mentioned you want to elaborate and comment more on the cross-border opportunities. So,
yeah, look, just one particular example I thought may be worth highlighting, and I know that I spoke earlier a bit about the need for investment in infrastructure and in the way in which we support small businesses and their cash flows. But maybe if I take a more retail banking example now, there are some great initiatives underway amongst the US banks, and particularly if I look at a firm called ID Partners, for instance, looking at where banks are, they have banks providing attestations to validate that a person is a real person and that they're not a bot, for instance. And I think you're going to see more things come to market there that support the use cases of major ticketing agencies or major footwear companies, so that when the next lot of Taylor Swift concert tickets are going on sale, or the next sneaker release is coming from one of the major footwear companies, in terms of ensuring that it's not a scalper or a fraudster that's now that they can readily get past the capture initiative and be able to just sweep up the first 100,000 items. You are increasingly, I think, going to see that opportunity of banks providing the attestation that somebody is a real person and that they are actually entitled to their legitimate place in the queue for those sort of releases. Now, one of the things that we need to look at from the position of an Australian bank is we will have Australian customers who will want to be able to participate in those sales, in those releases. So I think it's really crucial to us that we're keeping abreast of those international opportunities and that we're able to make sure that the systems we're building are not closed systems at a national level, but that they are interoperable and connective there. I have a personal interest. I haven't told my kids this yet, but I got on a couple of weeks ago and bought tickets to the Singapore Grand Prix next year to bring them here for that. So we have, as a consumer, it's a reality that I think a lot of us face. So I think that's a really important piece for us of how do we make sure that we're connecting with those sort of initiatives, and it's so that we can be supporting our migrant customers, our customers who are simply transacting offshore, our importing and exporting customers. And we don't necessarily need to have a global banking operating model with retail banking licenses on the ground in every market around the world. We just need to ensure that we've got a codification of standards and interoperability so that we can support the customers and the inflows and outflows across borders as is needed in the economy and in social interactions.
Thanks. I want to focus slightly more on the supervision question. And Simon, your bank is operating in Hong Kong and also Indonesia. Previously, both of you work at Citi that work in multiple regions and countries. And in Asia, you have a complex of regulation in different countries. And now you add on top of the banking regulation is data regulation and all this and that. How do you navigate through the different regulatory regime?
I think first and foremost, I think we enable and empower the local team to interface with the regulators. I think that's the most important thing, right? But if you look across the region, I think regulators themselves actually talk regularly. And I think if we look back at the last 10 years, right? Obviously, the first set of regulations in fintech came from mainland China, the regulators, because it was booming. And by, I think 5 years ago, if you look across Asian regulators, let's say the first set was mostly related to digital payment and P2P lending, right? Those similar regulations were actually spread and conveyed across other Asian regulators. People actually copied many of them. Now, of course, I think specifically on the retail side, right, with the emergence of online lending, obviously interest rate cap, proper collection practices became a very common theme. For social stability as well. So I think these themes are translating across in multiple regional regulators. And then, of course, when you go into the banking side, a big portion of it is transaction monitoring that Anju was alluding to. That is a big part that everyone is focusing on. File reports, you have to follow up those reports on a timely basis. If not, then you have to get back to the regulator to say why you didn't clear all these backlog of reports and independent assessments and stuff like that. So I think these are the big trends that we see right now. And then other than that, I think different regulators have different sort of focuses as well, right? In Hong Kong, the Hong Kong Monetary Authority, Hong Kong MA has a big focus on fintech. So they have a fintech roadmap that all the banks have to submit the roadmap and track against it. And now ESG become a very big portion of it for many Asian banking regulators as well, to make sure that they are having a strategy to promote ESG and green-related activities.
Interesting. So the scope and the coverage of the regulation actually has more commonalities than we thought.
Yes.
How about you, Anju? What do you see?
I want to give a compliment to the regulators in most countries in Asia. And also, I want to add Saudi Arabia. I'm on the board of a bank there, and I do see the way the regulators work. I've lived in Singapore for 25 years. I've seen how MAS works, and I think they do a superb job. And I think it's a bit of tough love. We say that the regulators are tough, but we should never underestimate the benefits that we have in this part of the world from regulatory clarity. The 3 or 4 years that I was living in the US, I saw what a spaghetti it was, right? There are so many regulators. federal and state level, and then often they can't agree with each other. Sometimes they are suing each other, or sometimes the companies have to sue the regulators to get clarity, and it drags on and on and on, and it increases your expenses and your cost of doing business. And we are very fortunate in Asia that we don't have to deal with all of this. And I think that's also the reason why we don't see too many bank failures in this part of the world, because the regulators do a really good job. So I have to mention it. I'm no longer in a bank, but I still have to mention it.
But would you agree to the US compared to Asian regulatory standard and effect?
Well, I certainly agree with the call out that Anju made, that the Monetary Authority of Singapore has, I think, been the global leader in taking a forward-looking view of risk and of developments particularly. But I think the other point I'd make is we don't necessarily manage our business to regulatory minima, and indeed, our own expectations of what is appropriate risk management is often at a level above that. And if I in particular think of the notion of how we protect customers' data and how we use customers' data ethically, I think we're driven by the standards of what would our customers expect of us, which is quite often higher than what a regulator or a Privacy Act might necessarily impose as a regulatory minima. And where I think that then becomes important when we think of it in a cross-border global model is, if I can borrow a quote, Scott Farrell, a Mallison's lawyer in Sydney, made the comment recently that data is culture. And I really love that representation, that how we think of data and what is the accepted use of data and how we are comfortable with people using our data or sharing our data is a factor of culture in different places. And so as you operate a business globally or across borders, you need to be conscious of what are the local expectations around data, which will quite often be different from one market to the next.
Interesting, that's true. And also the customer expectations not just different from region to region, but also changing all the time in the rapidly changing society. Do you see that coming as well? And how is that shaping your business, the change of customer expectations of what banking or what financial service would be?
I think that is definitely coming, and that brings us to a topic of embedded finance, right? Meaning people want experience of financial services, but not going to the bank. For example, how do you work with partners? How do you do sales finance? How do you enable people to do seamless account opening? In Hong Kong, we do very good at that. We're very good at that. So we finance 90% of Tesla EVs in Hong Kong. 90% Tesla cars are financed by us. It's a very seamless experience, simple, fill in a form. You don't have to wait for a few days. In fact, a lot of it get almost a zero interest financing. The same technology, actually we started that technology from digital lending. Because in digital lending, you have a website, you have an app, people come through, you have to give people an answer immediately, approved, rejected, is a fraudulent applicant or real applicant. So that trained the technology enable us to embed that into, for example, firstly, serving Tesla. Apple through authorized resellers have subscription services in Hong Kong where you go to an Apple reseller, you can get a 0% installment on Apple iPhones, and Apple also offer you a factory buyback in 2 years. So we actually work with Apple. We're only financial service provider supporting Apple on that as well. So I think being able to offer that is a bit of financial services and a lot of technology behind it. At the front, it is actually your partner's experience, a Tesla experience, Apple experience, and being able to help the customers, ourselves, and the partner in a win-win-win situation. I think this is what we see the trend is.
Interesting. And Anju, any comments on the changing customer expectation?
I think a lot of the younger customers no longer care about who provides them the financial services, whether it comes from a bank or a fintech or a tech company. I think they just want convenience and they want a better interface. But the regulators in most countries do have the burden of balancing financial stability, systemic stability, and consumer protection. So they have to always maintain this fine balance, whether it's across banks or banks and non-bank entities. So I think in the future, I don't know, people will need banking services, but where will they come from, and whether they'll come from lots of banks or fewer banks, we have to wait and see.
So that's the changes from bottom up, but also we have a few minutes left. I want to finish from the changes top down. We are in a time defined by mega trends. And Brad, at the very beginning, you said 4 trends. Among the 4 trends, there is geopolitical change as well. We have the geopolitical change. We have the AI, age of AI. We also have, the supply chain relocation and this and that. So how are the big mega trends affecting global banking moving forward?
So yeah, I certainly see geopolitical as one of those 4 big trends and the associated impacts on trade. There was a great report recently by New Zealand's trade agency that actually called out the expected shifts they see from the focus on efficiency more towards security and self-sufficiency and resilience, and I think that's very valid. It was a very good report. Of the other 3 big megatrends I see, I agree with you, Loong. I think AI is there, but the part of AI I'm probably most looking at there is what's going to be the impact on the workforce. And I think you can map out a number of different alternate futures of how that may play out. But even in the most optimistic, where if we respect the lessons of previous industrial revolutions and that jobs are massively disrupted and displaced in one area but created in another, well, even in that scenario, it is an enormous disruption and upheaval. And it's not necessarily going to be the 30 or 40-year-olds who have got family commitments and mortgages and need to be earning for another 20 years to fund their retirement that are necessarily going to be the ones who are best placed for the new skills and the new opportunities that are emerging. So I think there's going to be a substantive need for reskilling of mature-aged workers. And Singapore does that very well with a number of government-sponsored programs, but it's a bigger challenge in a lot of the rest of the world. So I probably have that as second, and then energy I think is a mega trend. I think it's great that we're seeing more of the energy mix from renewables. I hope that continues. I hope we see more, but I'm not sure that traditional renewables are going to be enough, and that we're going to need to see how we can do hydrogen at scale or nuclear fusion, and whether doing hydrogen at scale enables desalination to become more inexpensive and abundant and solve a lot of the water problems. So I think that's the big third one for me. And then the fourth is climate impacts and climate resilience and impacts that will have on agrarian land, agricultural trends, and in turn back to food security. And again, I think to Ravi Menon's point this morning, technology is a big part of the solution. Technology will help us to work out how better we can use our agricultural capacity, probably also help us with areas of resilience and modelling around weather impacts. But again, that's going to need not only the technology, it's going to need skills, and it's going to need capital. And as banks, we need to step forward not only in helping to fund the resilience in the face of those megatrends, but also helping to continue to support our existing customers. And my last comment on that I'll make is, through the COVID disruption, our Chief Executive Officer, Ross McEwen, spoke a lot about how we're continuing to support our customers because we believe that if you had a good business before the COVID disruption, you'll have a good business after it. I think that's a mantra that we need to continue with, but we're going to face a lot of other disruptions across these mega trends, and there's a lot to prepare for.
Interesting. So bank can provide the capital for the transformation in those megatrends. But Simon, how do you see your company, WeLab, prepare for those megatrends?
I think it's quite interesting. I think similar to many of you, this is year end. We go to a lot of conferences and a lot of speakers. Everyone, right? We try to be a macroeconomist. Economists try to predict whether interest rate is going to go up and go down. If you go and watch like business news channel, that's all they talk about, right? But I think my most recent realization is putting my entrepreneur hat on is we should plan our business as if the economy is not going to get any better. Don't worry about it going up or down. I think everyone should build a resilient, self-sufficient company, irrespective of where the economy goes, irrespective of what will happen in the elections, not just one, right? Next year, I think that's what we need to do. Just assume it's going to be as bad as it is today. It's not going to get any better. Don't bet on things that get better. I think that's what entrepreneurs and senior management should do.
So bottom line thinking, as we say in China. And Anju, is that what you tell your portfolio companies as well?
Yes,
to be future-proof?
Simon said it all. I mean, we are in a high interest rate environment. We are in an environment where liquidity is very, very tight, and it's not going to ease up in the near future. So you have to plan for it. You have to assume that the rates are not going to go lower and the liquidity situation is not going to improve. And within that context, how do you survive or thrive?
Survival to be future-proof. Thank you very much. Please join me in thanking our three distinguished panelists for the insights. Thank you. Really enjoying the chat.